Hey everybody, this is Josh with Southern Impression Homes. I'm sitting here with Richard Advani. Richard's been a lending partner with us for how many years now?
Probably at least 10 years now.
About 10 years, man. What would you say the amount of transactions we've done together?
Yes, definitely over 1,000, I would say.
Oh, wow. Wow. So obviously a really great resource. We're getting a good amount of frequently asked questions from our investors. So we thought it would be wise for Richard and I to sit down, kind of walk through some of those, and then I'll let Richard give you a better explanation of what to expect down the road. So Richard, don't mind kicking us off. Tell us a little bit about yourself and your operation.
Absolutely. Yeah. So I am based in Los Angeles area. I've been in the mortgage business about 15 years now. Been with my current lender for 9 years. I actually am a real estate investor myself. So I drink the Kool-Aid. I have 18 properties currently, 3 in Jacksonville, 1 in Ocala. So I personally bought a lot with Southern Impression. My mother, my brother, my family, my friends have all had a very good experience with them. And then as Josh mentioned on the lending end, I've done, close to 1,000 transactions, give or take. And we've developed a really good process to effectively work together to make sure that all of you clients and our clients have a smooth process and are able to acquire as many properties as they're comfortably getting.
Absolutely. Absolutely. So let's go ahead and kick it off here. Tell us a little bit about the typical underwriting qualifications.
Absolutely. So the main thing that determines how much or how many as it relates to investors is their debt to income ratio. And the way we calculate that's actually pretty straightforward. I know, people in our business like to make it seem extremely confusing and complicated, and it can get there, but for the most part, it's not. So firstly, I'll say, contrary to what most people think, it doesn't matter if you have $2 or $3 million in the bank. You don't need lots of money to buy real estate. But also on top of that, it doesn't matter how much you owe on the debt either, right? I talk to a lot of new investors and they start, going over their finances and they owe $600,000 on their primary home and $200,000 on a rental. What we are more concerned with is the actual monthly payment on that debt. So broad level, the way we calculate debt to income ratio is pretty straightforward. The debts that we look at are minimum payments on credit cards, minimum payments on car loans or student loans, really anything reporting to your credit report, your housing expense, whether you rent or own. And typically we'll divide that by your gross monthly income. So if you're making $10,000 a month, the total allowable monthly debt that we will typically allow is almost 50%. So that would mean the total of your debt can't exceed $5,000 a month. And once again, that would include your primary home. That would include any other monthly debt you have, auto, revolving, and so forth. If you are a homeowner, we do have the ability to use projected rental income on the property you're trying to buy, even if it's not rented out. And the reason why that's crucial is we talked about debt to income ratio, given our ability to wash that new proposed debt for the rental, it doesn't increase your debt to income ratio, which means if we can qualify the client for that one property and they have the down payment funds, we can typically run them up, to 5, 6, 7, 8, 10 properties as quick as they're comfortable moving. So it's actually pretty straightforward in terms of how we calculate it.
Awesome. Awesome. And then for those that are trying to put together their investment strategies, what type of down payment should investors expect?
That's a great question. So that has evolved ever so in the last 6 or 8 months with obviously COVID. Single family homes used to be as low as 15% down with mortgage insurance. Those products aren't available right now, but they'll probably come out again in the near future. So to answer that question, currently you're looking at about 20% down for single family homes. Multi-units, anywhere from 2 to 4 units, are at 25% down.
Gotcha. And then if you could walk us through the life cycle of the underwriting process and what investors could expect related to the communication aspect.
Absolutely. So the underwriting process is generally 2 or 3-fold. Typically at application stage, we'll gather all of your documents, maybe a blood sample and a firstborn, but we try not to. Once we have all of those documents, the loan typically will go from my team, myself, my assistant, to the processing department. The loan processor's job is to get everything compiled. That way the loan can be sent to underwriting, at which point the underwriter will review your income, review your assets and your credit, and generally either approve or not approve the loan. Assuming they do approve the loan, though, and that process takes about 2 weeks from when we start the application, there still is going to be a second round of documentation requests. Those are the approval conditions. A lot of people aren't prepared for that unless obviously they understand the process. You do provide documents generally at least twice, once at the application period and then once post-approval. And those post-approval conditions typically are, updated pay stubs, explain this address reported on your credit, or relatively minor things. Once we have that post-approval list to you and you provide those items, then the loan sent back to underwriting for final approval, at which point we can schedule the closing date. Now, generally that happens in 30 to 45 days. Given that most of what we're doing with your team is new construction, most of the time we have a good amount of time to get the loan ready before the property itself is ready, which is awesome.
Gotcha. And then to piggyback off of that, going to the closing date there, what should investors expect in terms of closing costs?
So that's a great question again. Closing costs are really twofold. When you're purchasing a home, typically the bulk of the costs, which are title and escrow and recording costs and so forth, are determined by the escrow or title company picked by the seller. So whether you're buying a new construction property as an investment or whether you're buying a straight standard sale as a primary home, typically those title and escrow fees are determined by the seller. In that case, that would be you guys. And to the investors out there, as you can imagine, as a seller, Southern Impression is typically vetting a lot of title and escrow companies to make sure that they're getting the most competitive rates available for us as investors. That way, we can put as little as down as possible and buy more properties.
Absolutely. And then, there's a lot of talk about asset protection these days, and a lot of people are beginning to educate themselves and to look into things like to LLCs. Is it possible for an investor to purchase a property through an LLC rather than their own personal name?
It absolutely is possible. However, generally not with conventional loans, which is what I and most of the lenders they'll encounter offer. Conventional loans are the Fannie and Freddie loans that have the extremely attractive interest rates. If you are trying to get a foreign national loan or a little more non-traditional loan, generally those are available to investors, but they'll have much higher interest rates, 6%, 7%. So what most people will do is, assuming they qualify, is they'll exhaust their 10 Fannie Mae slots, their 10 conventional loan spots. And once they exhaust those, then they'll move to those more non-traditional products, which have generally a little higher rates and fees.
Gotcha. And in the 10 plus years that we've been in operation, we've really casted a wide net in terms of the investors that we've been able to reach. And today we have investors in over 6 different foreign countries. Is it possible for an investor to finance a property who's not a U.S. citizen?
It is, once again, however, not with what I can offer at the moment. I am working on channels for us to be able to offer foreign national as well as over 10 finance loans, but in all reality, that won't come to fruition until probably middle of second quarter of next year.
Gotcha.
But there are out there for other lenders that do offer that.
Understood. And you have a lot of experience working with first-time investors, and it seems as though almost every conversation I have with somebody that's pulling the trigger on purchasing their first investment property, they're a little skittish and they ask themselves, well, what do other investors do? So what are your recommendations for a first-time investor?
Well, I think first things first is, given that most of what you guys offer is new construction, it takes so much of the guesswork out for new investors. Look, investing out of state can be complicated and it can be, lead you down a bad path. But those are typically people that are buying the $60,000 properties in, Michigan or somewhere else. When you're buying a new construction property in a good area, typically that's going to, take out a lot of the risk associated with out-of-state investment purchases. The first thing I'd say a new investor needs to do is know what you're buying, right? Don't just chase cash flow, because Sometimes I have investors that call me and say, hey, I'm looking at a new construction property for 240,000 or whatever the price is in Florida. However, that gives me X amount of return. And they're comparing that same property to a 2-unit in Cleveland that's 50 years old and trying to ask me what they should do or what's the best path forward. And, look, none of those are bad investments, but you need to know what you're investing in and you need to have realistic expectations. Myself, I like, my day job is most of our clients takes up all of our free time. And I want my investment to be passive. And I know I'm not going to go to Cleveland and buy a 2-unit property that's 40 years old and have a passive investment. But I do know if I'm going to buy a new construction property through you guys, for example, it is going to be more passive. The management setup, the property's brand new. So, I don't think much is going to go wrong with it. There is a warranty. So, know what you're buying. Make sure that you're comparing apples to apples. And also, like any investment, real estate is really, returns are a matter of risk. If you take a riskier property, the odds are you potentially could get a higher return. Although from experience, I can tell you the realized return 3 years later on a high cash flow property versus a conservative cash flow new construction, they end up being about the same. The difference is you put a lot of time, effort, a lot of sweat, a lot of headaches into that older property. So you definitely know what you're buying. Another thing I'd say is really important for new investors and even seasoned investors is one of the things that can cause a lot of complications in the loan process, even if you're very well qualified, is your down payment funds. Generally, what a lender asks for in terms of proof of your down payment funds is for 2 months of bank statements. And often what we'll see with new investors and sometimes even experienced investors is there's a lot of activity in those 2 months of bank statements. And that activity could range for transfers from another account to bills paid to whatever it may be. And what ends up happening is those additional deposits and withdrawals give us information that, number one, we're not asking for, but things that may cause complications or cause issues. For example, maybe you're voluntarily paying your mother's auto loan every month for $200, and the lender sees that $200 a month every month going out. Well, a lot of times we're going to consider hitting your debt to income ratio with that, or we're going to ask you for proof that you're not obligated on it, and we won't hit your debt to income ratio. But getting that proof can get quite cumbersome. Mm-hmm. Additionally, if there are deposits from, let's say, a stock account into those 2 months of statements you provided to us, we're going to need 2 months of those stock statements now. And maybe those stock statements had a deposit from a different account. So we need 2 months of those statements. And it turns into this huge cycle, which is frustrating for you as a client, frustrating for us as the lender as well, and can cause issues. It is important to note that when you're applying for a loan, all the down payment funds have to be coming from the account of the person on the loan, which sadly means, even if you're married, if you provide 2 months of bank statements to me and spouse one is the only one on that particular application, and we see a transfer from his wife's account month prior for $5,000, we can't use those $5,000 unless she's on the application. So to summarize, what I do personally is I have a specific real estate investment account. If I know I'm buying real estate, there's no deposits, there's no withdrawals, there's not tons of activity in there. That way, when I do provide my 2 months of bank statements to the lender, it's clean and it's easy. It's an open and shut case. To expand on that too, one thing I've had a lot of clients do is, contrary to what all of us do, right? We get direct deposited into our checking account. We'll pay our bills from our checking account and then maybe transfer some extra savings to our savings account, right? I actually do the opposite. I have my paychecks deposited into my savings account and then leave whatever I want to in my savings, and then transfer money into my checking account to pay my bills and have all the activity. So once again, with this strategy, when you go to a lender to get a loan, you provide 2 months of savings account statements. The only deposits are payroll related. It's easy to explain. The withdrawals are withdrawals to your checking account, and it's an open and shut case once again. So that is one of the bigger issues we run into complications, speed bumps, whatever you want to call it, with new or experienced investors. So have a real estate investment account. Specifically, if you have the money now to transfer a chunk and keep it in there, do that. If you don't, consider having, paychecks deposited into a savings account versus a checking account.
Gotcha. Wow, that's incredibly informative. That's great information to have. That's all the questions that I have for you. If someone's wanting to get in touch with you to get the ball rolling, how do they get in touch with you?
I'd say the easiest way at the moment is to give me a call or text me at 949-294-0435. As you're aware, I'm currently going through transition with lenders. So within about a week of this coming out, I will have an email address as well as a formal process within the new company itself. So firstly, I appreciate everything you guys do as an investor. The properties I bought with you, I can tell you, have been some of my most seamless transactions. And I mean, I haven't had any interaction other than collecting the rent checks on some of them for years and years and years. Being that they're new construction, my experience has been there's low turnover. Most tenants, when they unwrap that toilet for the first time and take that first shower in that bathroom, they don't want to move a year later. They want to be there long term. Also, being that I'm an investor as well and drink the Kool-Aid, I think I make a great match for any investors out there. I understand corporate structure better than most. So if you're self-employed, don't think you can't get a loan. You absolutely can. I look forward to working with you guys into the future, another 10 years, another 1,000+ transactions. And I'm here to answer any questions that any investors may have in the meantime. Last thing I'll say is a lot of investors are scared to talk to a lender because most lenders, want to pull your credit and want to get an application and want blood samples. I'm not like that. I'm more than happy to have a conversation with you. I don't need a credit check to give you interest rates. Whether you're ready now or in 6 months, feel free to reach out to me and have that consultation call.
Absolutely. Well, we appreciate your time, Richard. As always, it's definitely been a pleasure.
Thank you. Thanks, Josh.